For years, people have said gold and silver prices were being held down. Manipulation, central bank interference, market suppression, whatever you want to call it, the idea has always been the same, that these metals were not trading at their real value. But now something is happening, and it is happening fast. The idea of gold and silver price suppression isn't just a theory. It's happened before. In the 1960s, central banks formed the London Gold Pool to artificially cap the price of gold at $35 an ounce. That system collapsed in 1968, and once gold was free to trade, it shot up to approximately $850 per ounce by January 1980. More recently, in 2010, commodities trader Andrew Maguire exposed alleged manipulation in the gold and silver markets. His claim led to a Commodity Futures Trading Commission (CFTC) investigation, where major banks were accused of using paper contracts to suppress prices. Whenever gold has been artificially held down, it eventually breaks out. And if that is happening now, we could be in for a major shift. Gold prices just hit an all-time high of $2,956 per ounce, breaking past resistance levels that had held for years. Meanwhile, silver is climbing now, trading above $33 per ounce, and analysts believe it still has significant upside if past suppression is unwinding. One key indicator is the gold-to-silver ratio, which currently sits at 88.9 to 1. Historically, this ratio averages around 65, meaning silver may be significantly undervalued compared to gold. Gold and silver don't move like this without a reason. What's happening now isn't random. It's being driven by real changes in the financial system. A massive surge in physical gold demand is happening right now, especially in New York. Investors are not just buying paper gold contracts, they're demanding the actual metal, showing a deep distrust of the paper market. Even central banks are making big moves. In 2024, they continued one of the strongest gold buying trends in modern history, prioritizing real assets over fiat-backed reserves. Major financial institutions are also revising their positions. Goldman Sachs and JP Morgan have both raised their gold price targets, a clear sign that institutional investors believe prices will continue rising. This isn't just retail investors buying a little bit of gold on the side. This is central banks, institutions, and major players all making moves at the same time, and they're not betting on lower prices. If price suppression is breaking down, gold and silver may have much more room to run. Gold's breakout above $2,900 means there's little technical resistance left before $3,000 and beyond. Silver, meanwhile, has historically followed gold's lead with explosive gains once it gets moving, often outperforming in percentage terms. I speak to investors all the time who express concern about gold and silver prices being suppressed. Now, if this suppression is truly ending, this could just be the beginning of gold and silver's real value being realized, an investor's dream.